luxury property in Mauritius, a growing market with excellent investment value. The Mauritian economy has undergone a major transformation since independence in 1968. The country has gradually moved from sugarcane monoculture to other sectors like real estate, tourism, and the export processing zone. The implementation of an economic diversification and democratization policy has fostered inclusive growth, human capital development, and upward social mobility. With the phasing out of EU sugar quotas, the government has embarked on an adjustment program since the turn of the millennium to attract foreign direct investment, FDI, required for sustained development and growth. IRS, the first property scheme open to foreign buyers. The Integrated Resort Scheme, IRS, was introduced in 2002 to allow foreigners to acquire freehold property in Mauritius. Certain conditions apply for the purchase of residential property under the scheme, including a minimum investment of 500,000 USD, excluding tax, and a maximum plot area of 0.5341 hectare. The IRS is much more than a property scheme. This integrated resort development concept has revolutionized the market. Off-plan acquisition on a VEFA, Vente en état futur d'achèvement basis, backed by a performance bond, Garantie financière d'achèvement, GFA, provides an extra level of assurance for future owners both financially and in terms of quality of workmanship. Multiple benefits. The IRS program offers various advantages to buyers, including eligibility for a residence permit and a favorable tax environment. Mauritius has tax treaties with 44 other countries, and the country has a flat 15% income tax rate for both individuals and corporations. There is also no tax on capital gains, inheritance, dividends, and capital. From a South African perspective, the SADC property allowance, which came into effect in 2010, allows individuals to invest in excess of the annual limit of 4 million rand per person on the outflow of funds from the country. Heritage Villa Varish and Nabalese Marina have become iconic points of reference among the 13 approved IRS developments. Heritage Villa Varish is a unique residential estate tucked between a golf course and the sea in the heart of the pristine nature of the 2,500-hectare Heritage Bellhomme estate in the southwest of Mauritius. Upon completion, the development will comprise 288 villas, out of which 166 have already been sold. Nabalese Marina is located in Black River, on the west coast, and is the only residential marina on the island. Owners enjoy access to the high-end facilities within the resort. The real estate scheme, RES, was launched in 2007 to accommodate smaller-scale developments with a maximum area of 10 hectares. The Invest Hotel Scheme, IHS, which allows foreigners to own a hotel room or villa, was also implemented in 2010. The IRS and RES programs gave way in 2015 to a single legal framework, the Property Development Scheme, PDS. This decision by the Mauritian government aimed at harmonizing the regulation of real estate laws within a single legal framework. Smart, integrated, sustainable, and modern cities. The country has continued its policy of upmarket positioning alongside the significant broadening of property options. The Smart City Scheme, launched in 2016, follows the same approach with the development of new, integrated, sustainable, and modern cities. Building on their strength, reputation, and long-term vision, the country's leading business players have embarked on ambitious developments aimed at positioning Mauritius as the economic gateway to Africa and the Indian Ocean. Various projects are already underway, including Mocha Smart City. Spearheaded by the ENL Group, this development is ahead of the game as the planned, integrated, and sustainable development of the region has been ongoing for a decade now. In line with the concept of a lively and modern urban space with all the necessary amenities, educational facilities, shopping centers, sports and leisure infrastructure, business hubs, etc. Mocha Smart City aspires to become the leading smart region of Mauritius. Here again, foreign investors enjoy certain tax and administrative benefits, including exemption from land conversion tax for non-residential developments, customs duties, except for furniture, and corporate income tax for the first 8 years. Foreigners who invest at least $5 million in a smart city development may also apply for Mauritian citizenship after holding a residence permit for a period of 2 years. The latest development is the enactment of the Non-Citizens Property Restriction Amendment Bill in late 2016. This new piece of legislation allows foreigners to buy apartments with a minimum value of 6 million rupees in condominium developments consisting of at least 2 levels above the ground based on criteria established by the Economic Development Board. Substantial FDI contribution. 16 years after the launch of the first property scheme available to foreigners, some 2,500 residential units have been sold. These developments have brought in more than 50 billion rupees. In 2017 only, FDI inflows have increased by 4.4% to 14.2 billion rupees against 13.6 billion rupees in 2016. The property sector made the largest contribution with the injection of 5.7 billion rupees worth of FDI in IRS, RES, IHS and PDS developments. This has enabled the country to expand its offering while being a major source of capital flows and tax revenue. Property in Mauritius offers excellent value for FDI with various administrative and tax advantages. Luxury IRS developments such as Heritage Villa Valriche and La Balise Marina, as well as Mocha Smart City, draw on the strength of a trusted developer. Buyers are also guaranteed to secure an attractive return on investment.